Yo, it is Wednesday, October 8th. I wanted to make this video because I'm heading out to boxing in about a half an hour. So I wanted to put this out here before I go. I don't know if I'm going to be sparring tonight. I told you guys I'm having some treatment I have a partially torn rotator cuff, which I've had for a long time. But I finally went to treatment. It's not invasive. It's not surgical. They're doing it with pins. It's like acupuncture. It's called dry needling, and it has they attach like electricity to it. It stimulates, and it's supposed to foster tissue growth, repair, circulation. Actually, it feels a little bit better. I've had 2 sessions. I'm going for 6 to 8 sessions. Anyway, I'll go to boxing and see how I feel. So, new high in the S&P today. The flows. Let me talk about the flows. I don't see anything out of the ordinary. Yesterday, the leading flow was like 15.4 or 15.6 billion, something like that. That's higher than October, the 5th business day of October last year, and it was higher than the 5th business day of September last month. So, and total leading flows are up like 11 something billion over last year. So, I don't see anything so far from the shutdown. Now, maybe we could say, or we could speculate that the flows would be even higher than this, on a year-over-year basis if it wasn't for the shutdown. But as long as we're running along this at the same baseline as last year, or maybe a little bit higher, I mean, that's bullish. So risk assets, talking about stocks, gold, silver, they're all going to be bid. They're all going to keep going up. I mean, this is still very, very strong fiscal. So, I'm going to talk a little bit about gold because, seeing what's going on. So, today I said it's kind of funny because everybody is so concerned about the stock market that it's overvalued. It's just too high or whatever, but they don't seem very concerned about gold. And actually, I said that they're both running on the same, they're both being driven by the same dynamic, basically, which is massive fiscal flows. All right. And a friend of mine, he sent me an email. He said the email was some link to some article that said that there's a very low correlation between gold and stocks, meaning that, gold, suggesting, I would say, that gold acts inversely to stocks. To which I said the correlation between gold and stocks is not, it's not static. It fluctuates. Sometimes the correlation is very low, but there have been times when the correlation is high. And what I found interesting or kind of humorous in this article that he sent me was the first line of the article. They had a bunch of questions like, why does gold do this? Why do stocks do this? The first line was, how come gold doesn't follow stocks? And I'm like, really? I mean, we've been in a bull market for stocks, and we're in a bull market for gold. If you look at since 2022, when I keep repeating to you guys in 2022, when gold was at 1,600, I was pounding the table. I said that was the smallest short position in history by gold producers. And I said the Fed was about to raise interest rates, which was going to equate to a massive fiscal transfer into the economy. I said, you got to buy gold. You got to buy gold. I was going nuts about this. You could probably go back and see my videos at the time. So we've had this tremendous bull move in stocks. and we've had this tremendous bull move in gold. So to me, they're correlated. And so I said to my friend, he hasn't replied yet, but I said, look, if fiscal flows contract and it sends the economy into a recession, I predict both stocks and gold are going to go down. And I said, the winner of this bet, if you gentleman's bet, if you take me up on this bet, the loser pays for dinner. Okay? I haven't heard anything back yet. But let me give you a little personal story about me and why I think gold and stocks are correlated highly, by the way. Back in 1987, okay, I was a trader, member of the NYMEX at that time, NYMEX and COMEX. And 1987 was the stock market crash. All right, that's when the market was down 22% in one day. That would be like almost 10,000 points. It would be like almost 10,000 points on the Dow going down. It would be like, I don't know, 1,300, 1,400 S&P points in one day going down. So leading up to this crash, you know, I was like a die-hard bearish, always bearish, perma-bear. Like I told you stories about how a lot of guys on the floor, traders, for some reason, we were always trying to sell the market, always trying to sell. The guys who made all the money, they were buying, but we were always trying to sell. Every little break, it could be 2 ticks, we're like, offer, offer, offer. So leading up to this crash, I think it was October 1987, you know, I had been waiting like a tiger in the bush, waiting to pounce on my prey. I was just with my charts and everything, and the charts and the technical analysis and the RSIs and everything. I didn't know anything about fundamentals at that time, and for economics was out the window. Even though I had my degrees as an economist, but I was basically like a chartist technical analyst, and I was like, this is going to be the crash of all crashes. Like I was like one of these guys who thought it's the end of the world. This is the top of all time. We're never going to see. So what happened was, I'll make a long story short because I got to get going. So the crash happens, right? And at the beginning of the crash, I did have a short position. And then on that Friday, before, what was it, Black Monday, on that Friday when the market started to go down, I had a short position, and what did I do? I covered the short position. I made a little bit of money, and I covered the short position like an idiot. Then on Monday, we had Black Monday, and the market's down, 22%, right? That night, I said to myself, because I was so angry at myself, I was so pissed off, like, what an idiot you are, Mike. You got out, you had that perfectly timed, you took your little small safe profit. You're never going to make any money for yourself with these little small. And then I was so angry. And that night, things were getting really, really crazy. Like nobody knew what was going to happen. It looked like the whole financial system was just going to fly apart out of control. And I said to myself, I know what I'm going to do, right? The genius talking here right now. I know what I'm going to do. I'm going to buy gold. So I went in there and I bought like a big position of gold because I thought, hey, if the stock market's crashing, gold's going to shoot through the roof, right? So I went in there and I bought a big position in gold for me. And guess what happened? Gold freaking collapsed. And everything I made on that small little trade on Friday when I was short at the top of the move, it went out the window and then some by a lot. I got killed. I mean, I don't know what percentage of my equity in my account got wiped out on that stupid gold trade. But gold plunged because people were selling it to cover margin calls and all this other stuff and just to get liquid and cash and all this other stuff. Luckily, the next day on Tuesday, I managed to make back some money, but it wasn't in gold. The market bounced and I shorted the bounce. Of course, I always went short. Back then, I always went short. I never bought. It was like some kind of mental illness. And it was even more, I remember I was not even on the floor at that time. I was trading from my house because things were crazy. I made a little money back on that Tuesday. But anyway, that's my gold story. And so, yeah, if the economy contracts, if we go into a recession, gold's going to go down. Like, I could say that without any hesitation whatsoever. And I'm always fascinated by these studies that, to me, it's kind of like, I've spoken about this in the past, like these mathematical formulas for like discounted future cash flow, all this kind of stuff, or these other things where I always talk about single variable analysis, where everybody's talking about the debt, the debt side, but they never look at the asset side. Like, somebody's liability is another individual's asset. Somebody's debt is somebody else's credit, so like, I just get a kick out of these people who are very highly educated and seem to, speak well and present well. And like, all their analysis is on one side of a balance sheet, single variable analysis. So like, when they're doing correlation studies, just simple mathematical correlations, you're not just simply running a correlation on two series of numbers, okay, as you would, let's say, in a mathematical example. There are many, many underlying factors that influence gold and stocks, okay? And I mean, when you're just running a price-to-price correlation, I don't think you're taking into account how those factors could be different at different times. I think that's a very cursory or unsophisticated way to make an analysis. That's just my view. But the other thing is, like, my eyes don't lie to me. My bank account doesn't lie to me. At least it didn't back in 1987 when the stock market crashed and I lost my ass because I bought gold. And my eyes are not lying to me right now when I see record after record after record in the stock market and record after record after record in gold. And to say that there's a low correlation, I don't know. Maybe there is. But I mean, really, you could go all the way back to pretty much 1980. And you look at, we've been in a bull market and, stocks just keep going up. Economy keeps growing. And the gold price keeps going up. Are my eyes lying to me? So we'll see what happens. But that is that's the bet. That's my offer. And we'll see what happens. Anyway, I got to get ready to go. So I don't see any slowdown in the fiscal flows. They're saying that the shutdown could last into next week, but that's going to be it. They'll wrap it up. Today was a Social Security payment day. And next week is a tax train. All right. The other thing I wanted to talk about, but I don't have a lot of time. Maybe I'll do it when I come back from boxing. Otherwise, I'll do it tomorrow. There's a lot of talk right now about tight liquidity because reserve balances have come way down. And I have a different view on that. So in my next video, I will discuss it. Anyway, thank you for watching. I'm going to head out to my boxing gym now. And please like and subscribe if you decide to. I would appreciate it. And don't forget to go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. I'll see you. Bye.